Before we get started, I want to remind everyone that the information in this presentation is not to be or construed as investment advice. The information presented are subject to change without notice, and while we have made every reasonable effort to ensure that the content is reliable and accurate, we have not independently verified the content and are not responsible for errors therein. Please consult a professional advisor before putting a loonie in any of these financial markets. Hi everyone, my name is Richard Diaz and welcome back to the IceCap Canadian Market Wrap. In this week's episode, we're going to review the 5 themes we laid out at the beginning of the year. We'll touch on if and how our views have changed, and in a future episode, we'll go over a revised set of themes for the rest of the summer and into the fall. I would also encourage you to suggest some themes you think will be critical for capital markets or any subjects or topics you'd like me to cover in the comments section below. In episode 18, released on January 2nd, we discussed 5 major themes that we felt would dominate the news cycle and impact the Canadian economy, and they were as follows: Canadian election, Chinese stimulus, Trump, the limits of central banking, and of course, global conflict. And I'd like to say, on a whole, we did a decent job, although there's always room for improvement. Okay, so let's review. I would be lying to you if I told you I was happy about how the election turned out, but let's give credit where it's due. The Liberal Party jettisoned its deeply unpopular leader and ran a successful election campaign focused on fanning the fear of Donald Trump's threat to annex Canada to gullible baby boomers. We know this because within a month of declaring that Canada's relationship with the U.S. was, quote, over, Mark Carney has repeatedly gushed at Donald Trump, even going so far as to call him a transformational president. The strategy to use fear of the American boogeyman worked to distract from a record of liberal incompetence, corruption, and mismanagement. It was as cynical as it was effective. However, the Conservatives would do well to look inward as their big gains hide some reticence over their young leader's likability, and blaming Trump for their failings will not serve them well in the next election, which is likely to come sooner rather than later. One thing we got wrong was Trump's commitment to putting tariffs on Canada, the U.S.'s biggest trading partner, and keeping them on. We still think a deal between Canada and the U.S. will be struck before the puck drops on the new hockey season, but we failed to properly assess the administration's love affair with tariffs to reshape its domestic economy. We were, however, right about the Chinese government resorting to a major stimulus package to boost growth and ease the pain from its crashing real estate market. However, those headlines were swamped with the news of Trump's global tariff rollout and how childish and frankly insane the math used to calculate the tariffs proved to be. Capital markets were not impressed, and the U.S. equity market has since underperformed. One can argue that there's been some capital flight, however, it is way too early to draw any meaningful conclusions from this. Incidentally, Canadian investors of all types continue to allocate billions to the U.S. bond market and equity market. In any event, it will take years for all this to shake out, and we still believe in a moment of crisis, U.S. assets and the dollar will attract safe haven flows, and our IceCap portfolios remain positioned for this. We also argued that going forward, life would be increasingly difficult for central banks. Central banks seem desperate to lower short-term interest rates, which is very frustrating to me and a subject for another topic on another day. The problem is that sticky inflation in Japan and the U.S., for example, and concerns over the sustainability of growing government budget deficits everywhere is putting pressure on the long end of the yield curve. As you can see from the chart, 30-year bond yields have soared. This indicates that bond investors are unimpressed with the risk-return profile of these assets and are demanding more yield. It also makes government borrowing more expensive. Bonds are the backbone of the financial system, and there is a risk this vicious circle spins out of control. At IceCap, we continue to see this as a huge risk going forward, and again are positioned for this. The final theme we discussed in early January was global conflict. Unfortunately, I think it's safe to say that we were right about this, and things have hotted up. By my count, there are several active conflict zones in the world, and the specter of China invading Taiwan continues to loom over us all. With respect to the current wars, we do not see any major de-escalation on the horizon, and certainly not this year, but we sincerely hope we're wrong. And this reminds me of a quote by Albert Einstein. I do not know what weapons World War III will be fought, but World War IV will be fought with sticks and stones. The prospect of World War III is indeed terrifying, and naturally, geopolitical events of this magnitude usually create volatility in financial markets. One of our major concerns is, of course, the Middle East because of the energy market, and it's important to the global economy. Any escalation there would send oil prices soaring and put other markets at risk. Thankfully, at IceCap, our portfolio is already positioned to provide some protection against this type of global event. All right, that's it for this week's episode. Thank you very much for watching. Please like, subscribe, and follow for more. And as always, we manage money for families all across Canada and the world, so please feel free to get in touch.